NDTV has been speaking to analysts, and as far as India is concerned, many believe India is resilient but not insulated from what's happening in the rest of the world. Now, we have seen the Nifty and the Sensex stumble in trade over 4%. We've seen all global markets plunge as well, with European markets that just opened a few minutes ago also plunging over 5% in early trade. And all of this is happening why, for our viewers to understand that trade war worries are now mounting. We've seen US stock futures tumble nearly 6% in trade. We've seen Asia's stock markets extend that decline. Japanese stocks tumble over 8%. And of course, we have seen worries coming across as far as stock markets are concerned globally. Australia's stock market in early trade alone has lost $160 billion in early trade alone. And all of these worries now mounting. And of course, remember, we have heard JP Morgan say there's a 60% chance of a worldwide recession, while Goldman Sachs has said there's a 35% probability of a US recession alone as compared to 20% earlier. So investors in India losing over 16 lakh crore in early trade. This, and of course, as investors remain jittery and in wait and watch mode. Now, to of course decode this market mood further, remember, we are going to be joined by experts. We are joined by Somil Mehta. He is the head of alternate research at, of course, Mirari Asset Share. Thank you for your time. Your first thoughts for small investors witnessing these steep declines today in early trade. We have, of course, seen levels such as over 4% tumbling as far as the benchmark indices are concerned. We've seen mid-cap and small cap indices bleed in trade. We have seen all sectoral indices trade deeply in red, tumbling over 2%, over 4%, over 5%. So an across the board sea of red. So what do small investors make of this market mood?
See, overall, the market trend has been down. And if you see in the last 6 months, we've been forming low tops, low bottom. Mid caps, small caps have been crashing, making low tops, low bottom. So overall, the trend definitely remains negative. However, there could be value buying from these levels. Last week, we saw President Trump giving their statement and making those changes in terms of tariffs. So I think from here on, if I have to look at as an investor, then the worst case scenario on the downside would be 20,500 or 20,000 levels. But there could be value buying in large cap stocks. Stay away from small caps and mid caps. Definitely, there could be more selling there. There could be very sharp sell-offs in these stocks, small caps and mid caps. But in the large caps, there are very good value buying. There are where you can, start accumulating, like in Reliance or ONGC, NTPC, Ultratech Cement. There are a lot of stocks where you can start buying where there's a lot of correction. And in fact, in Ultratech Cement or Grasim, there's not much correction. It's been consolidating in a range, and I'm expecting these ranges to break on the upside. So invest in large caps. Worst case scenario would be 20,000 or 20,500 on the downside, and this is a very good opportunity to buy. There is definitely uncertainty at this point of time in coming weeks, but this could be the time for big investors or the long-term investors to come in and buy.
Right, Somil, you say, well, this is time for long-term investors to come in buy. That is your suggestion. But for those saying that, look, India's stock markets and market fundamentals, as it were, macroeconomic fundamentals, as it were, remain strong, remain resilient. But India clearly not insulated from what's happening in the rest of the world.
Of course, it's not. Of course, it's not. And that's the reason we are reacting. The entire world has been reacting. And I'm absolutely, that is definitely normal. And this looks normal. We were very expensive on the higher end in the last 6 months, and we've been correcting. There are stocks which are correcting very sharply. From here on, I don't see much downside. There is more upside than the downside. Now the correction is already, almost over. There is probably a couple of months more of this uncertainty. Once this uncertainty is over, I think we'll form a nice base, and then we'll start moving up again. But at this point of time, definitely uncertainty is there, and for some time we will see some sell-off. We will see in the short term, in the medium term outlook, we'll see low tops, low bottom formations, and on the downside, probably 20,000, 20,500 would be the next level to watch out for. However, that will be a right level to buy, right? Even at 20,000 levels, we'll be corrected 25% from the top. So that will be the great time to buy.
Right, Somil, for our viewers and our investors sitting at home, investors really sitting at home, all investors tracking markets very, very closely, and all our viewers tracking markets very closely, what would you say? Is there more pain ahead? How should investors really look at their strategies now?
See, at this point of time, if you are talking about an investor, start accumulating large cap stocks. I would say ONGC, Ultratech Cement, even NTPC, Power Grid. There'll be very good stocks which you can buy, but only accumulate large cap stocks. This is a strategy for investors. Definitely in next couple of weeks, you will see more downside. However, that will be an opportunity to buy for a long-term investor. Now, if you are talking about a short-term trader, if you're talking about a short-term trader, I would definitely stay away from buying options, because buying options would be very risky, because the premium, in India VIX is very high, and it has gone up by 60% today itself, and I'm expecting it to go more higher. So buying options will not be a good strategy. The only options I would give you is, the only strategy for short-term traders would be in futures, where you can go short on stocks, mid-cap stocks, reality stocks, or IT stocks. However, wait for a bounce. Once the bounce is over, you can go short. For a mid-cap, for a short-term traders, I would say avoid at this point of time. Let the market bottom out, or let the market stabilize a little bit, and then you can start buying. For short-term traders, go short at higher levels. For mid-term traders, for a short-term trade, mid-term traders, avoid totally. For a long-term trader, long-term investor, it's a great time to buy.
Right, Somil, for those tracking other asset classes as well, we have seen US crude oil prices hitting their lowest level since 2021. US crude oil prices falling below $60 a barrel. Many saying that this oil price decline, steep decline in oil prices, could be a fresh opportunity for India. Your thoughts?
It is definitely an opportunity for India. If you see HPCL, BPCL today, it's positive. The reason it is positive, and even ONGC has started, making higher. It has made a bottom. I won't say a short-term bottom or a long-term bottom, but at least it has stabilized. So HPCL, BPCL is going to gain. These companies are going to gain, and I think crude will make a bottom here, like basing out pattern. It can definitely go down till 56 or 57 as well. However, it will base out here. It will slowly base out here and start moving up. But in this scenario, in next couple of months, I think the beneficiaries would be our companies here, like HPCL, BPCL.
Right. Thank you so much for sharing your thoughts. And of course, we will continue to track the market mood. But, investors who are jittery are in wait and watch mode at the moment for a lot, really, that is to unfold, as you were mentioning. Now, over to my colleagues, Anuj, Rayate and Puneet, Javeri, to get us really the mood on Dalal Street and the stock-specific action altogether.
It's a very happening morning here at the Dalal Street, especially after the way or the nature in which the markets have opened today morning. I've got Mr. AP Shukla, who's been following the markets for almost 4 decades now. So first of all, what is your first reaction to what is happening right now? Is it something that was unexpected lines for you, or did it come as a surprise?
No, it's a surprise, but this is a financial war already started between US and all other countries. So where it is going to end, nobody knows now.
So I want to understand, are there any long-term repercussions that we need to be mindful of? Of course, the volatility of the market is something that is expected, but does India have to worry about any sort of long-term repercussions which might be a result of this?
Definitely, we should be worried. India should be worried because this is a war and there is a financial loss. So no country wanted to have a financial loss. So our Modi ji, our Prime Minister, Modi ji is always keen on that there should not be loss to country in any condition. So there is a immediate loss if there is a duties are imposed to our product in US. uh, around 26%, where earlier there was a hardly anything. So there is a loss around 50 billion something. It is expected per annum. So it is not a small loss. So country is not ready to afford those things. How we have to compensate those things? So India has already created a war room to see how we have to subsidize or give support to our economy and our companies who are exporting to the US. So we have to increase our local spending, infra spending, so our companies can survive on that thing who are exporting much their production, percentage of production to the US.
It is a somber mood today on the markets, and that's of course impacted due to the Trump tariffs as a whole. But we've seen now that because of these particular tariffs, and now China also putting a 34% reciprocal tariffs over the weekend, it's essentially starting a global trade war. And we're going to see a lot of countries impacted because of that. Now, we have seen, of course, sectors which have high export exposure, essentially, sectors such as Nifty IT is suffering in trade today. We've seen stocks such as Infosys as well as the mid-cap names of Persistent Systems and Coforge being one of the biggest losers in trade today. While the other sectors that we've seen an impact is, of course, the Nifty metals. The copper stocks are also not doing very well in trade today, and that's largely because of the high export exposure that all these companies have. We've also seen the Nifty Auto today. Stocks such as Tata Motors have hit a 52-week low today. Apart from that, Sona, BLW being the other ones, they have roughly 40% of their revenue coming from the US markets. Some other ones such as Samvardhana Motherson as well as Bharat Forge are down almost 8 to 10%. But we've seen just some slight recovery from, in the morning the lows were much higher than this. So we've just seen some recovery there, but it's a down day in general as well. The other ones, just some impact we've seen on the textile name as well. But overall, it is a trade. Essentially, you could argue that, banking stocks are largely insulated from this, but we've seen a 4% fall on the Nifty Bank as well. And going forward, the company's commentary in Q4 will be one of the key things to watch out for. How is each company trying to navigate this tariff impact going forward? That will be one. And essentially, we've seen the Nifty consumption of the FMCG sector essentially do very well today in trade. It's essentially down 2%, but it's the lowest which is impacted because of this. It's important to see how we go forward in the defensive names essentially of FMCG consumption and banking. But overall, it's a tough day for the markets today, and we're seeing a Trump impact across sectors.